Good morning, traders. It's 8:03 a.m. Chicago time, coming at you from the financial district of downtown Chicago. It is freezing here already. It is the 8th of December, 2016, Thursday, rollover day. Just note, I'm not sure if you're new or seasoned to futures, but rollover is when one contract starts winding down in trading, and the next expiration, which will be March 2017, begins to pick up steam. The official rollover day is today. And in general, the volume does not shift to the next contract, to the March contract, until tomorrow. So a lot of people continue to trade March or December through today, and they don't shift till March, till tomorrow or Monday. I don't do that. I just keep things simple and in line with my data feed, which shifts today. So everything you'll see today will be slightly confusing because the prices aren't going to match yours. Because I am quoting and showing March 2017 prices. March prices are 5.25 points below in the ES. I'll also publish, as I always do, on a quarterly basis, all of the um, all of the adjustments for the NQ, the ES, the Russell, and the Dow on what the premium will be, the premium adjustment will be, so you can adjust your levels accordingly. This information is based on the CME settlement data that's published on their website last night. If you need a link for that, just shoot me a tweet or an email. I can give you that. But for now, you just need to know that the March prices are trading at a discount because we're still in backwardation instead of contango. They're trading at a discount of 5.25 points. That means in the future prices, which normally would be higher, are trading lower because dividends are higher than interest rates right now. Anyway, so a quick crash course in futures rollover and trading. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, for those who just walked in, we're rolling and are looking at March prices, March 2017 prices going forward. So discussion of the past will involve December prices. The future involves March prices, which will be confusing. I'm going to try to keep this short as possible. I don't have very much news to report. You have access to it. If you need a news feed or don't have a good news feed, which has been really important to have here lately, just shoot me a message at futurestrader71.com/contact, and I'll try to hook you up at least with a trial at a discount. But the ECB announced that it's keeping rates unchanged, leaves the deposit facility rate unchanged at negative 0.4% as expected. Marginal lending facility unchanged at plus 25 basis points as expected. The ECB policy statement says it extends the asset purchase target until December of 2017, a 9-month extension. It used to, the asset purchase target was March. Before this, they're extending this. There's a little bit of turbulence, of course, in Europe, and with the Italian referendum behind us, with the Austrian election behind us this past weekend. We have the French election to look forward to, and we also have Angela Merkel throwing her name in as to rerun as the head of Germany. So there's a lot to contend with here. Politics have been really interesting this year. Draghi says that they will buy 60 billion in QE from April until December, reiterates that the program can be amended if needed. So that's the big thing for today that was released. Draghi continues to speak now, so if you're trading the euro, Bund, or any other product in Europe, you're probably seeing some reactions there. It's been generally muted. Other than that, we got the usual stuff. We got initial claims at 258,000 versus 257,000, so slightly worse. Continuing claims 2.01 versus 2.05, slightly better. And then for today, what are we expecting going forward? We don't have much on the calendar today. Household net worth Q3 is expected at 12 Central or 12 Eastern, noon Eastern. I've not seen this figure before. The previous is 1.075. Not sure what that all means, but the calendar is clear for today. Let's quickly switch gears here and look at what we expected for yesterday. Again, a reminder, the prices you'll see here are December prices. The prices you'll see in my live charts are March prices, so they're going to be slightly different. The primary hypothesis yesterday is an expected push down to 2206 area, and then for the market to rotate up and start pushing out and through 2213. The expectation is we would get up above 2213 to about 2219 or so, and then rotate back down. That was the primary expectation. Again, bullish. The primary idea was bullish. Secondary idea is a choppy open, push above 2213, rollover, and break through that 2206 low volume node down here, and start working its way down into the point of control, the MC point of control. That didn't happen. The expectation on Hypo 2 is that it may not be ready to finally dissipate all of the volume that it collected in this profile here, dissipate that up, so it might need another day into the ECB to make that move. That, of course, didn't happen. Hypo 3 was a small chop on the open, and then a drive up, and that's the one that played out. So there was no way to tell which one of Hypo 2 or 3 was going to play out. So the first target would be 2213, of course, and then it's likely to continue higher. I did not have any targets up above because I'm disorganized right now and did not generate the measured move targets on my flex levels. These are the flex levels here. These are levels that show up on your chart. If you're on IRT, they're generated by my server, and you get those automatically. I just did not generate the measured move targets, and I had 2219 as a measured move target, then 2228 and 2250.5 was the next measured move up. Here's what actually happened. Again, this chart will not reflect the prices that were on yesterday's Trader Bite. You have to reduce these prices by 5.25 points, or you have to increase these prices by 5.25 points to match March. So 2213 even would be this 2207.75. That would be the equivalent. This opening swing needs to be dropped 5.25 points. It belongs down here. As I said, there's too much going on this morning. I'm a little bit disorganized. But what we saw yesterday, a couple things. Note that even in the March contract, the delta was very, very high. A lot of money. A lot of money was coming into the market, aggressive yesterday. The fact that and it was around 91,000 for the December contract as well. The fact that we hit such a high volume delta is really something to note. It's the getting up above 60,000 delta. That's the second sigma. Only occurs about 4.5% of all days tested. In this case, the test was for about 2,000. It's a little over 2,000 days. Again, past performance not indicative of future results, but it's to get above 60,000 occurs less than 4.5% of the time. to get into the 90,000, you're talking about 3 sigma, which only occurs about 0.5% of the days tested. Very, very. What's the point of all that? The point of saying all that is that it is um, very unusual to have that much delta. This is a very, very serious buying spree that we saw yesterday. There was a good amount of volume. The volume traded on this in the December contract was almost 2 million contracts, which is above what we would consider to be normal. So this is a very meaningful push here. Um, Not only that, but when you look at the overnight session, when we check out the overnight session, we generally, when we're pushing news-based, generally what we do is we retrace and move back towards the scene of the crime, which in the December contract was 22.2450, is when the burst of buying came across, and you'll see it. I'll show you that in the cash index chart. Uh, Generally, you start moving towards that on the overnight. It doesn't sustain itself very well. Um, but what you see here in the overnight is that the market is holding on to these prices. It is accepting these high prices, yesterday's closing area, as value. The volume delta overnight is slightly bullish. The price imbalance is the price-based inventory, overnight inventory, is also bullish. So it'll be interesting to see what happens this morning. It's not clear to me which way it's likely to go. What we know, though, given the way we closed on a trend day, we expect a higher high overnight, and we did put in a higher high, but it's a pretty lame higher high on the March contract. The high yesterday was 22.36, and we put in a higher high by a tick. And it's not behaving like a failed auction. This one tick test is not behaving like a failed auction, which tells me that there's a high probability of this continuing a little bit higher, giving the shorts a little bit more pain before it starts to rotate over and re-auction these poorly auctioned prices below. So I can't tell you how long that would take for it to before it can rotate, but overall, it's holding on to the strength, and also yesterday triggered the Dow theory signal. The transports made new highs for the first time in 2 years, so there was a lot to contend with there. Transports trading at 93.71 yesterday on the close, got up as high as 93.80. Those are crazy high prices for that product, and so a lot of Dow theory type, systems and institutional programs kicked in yesterday. So this is very, very meaningful. I'm not a huge fan of these trending days. I tend to not trade them well. It's my weakness. So there's not much I can comment about here. I just know that there's a lot to repair down here, down into the from below the burst, where the burst happened up here, down. There's a lot of repair that's likely to happen over the next couple of weeks or so. Today is going to be very telling as to what we should expect coming into the Christmas break, the holiday break, and the Santa rally is clearly well on its way. I cannot comment too much about why this is happening, how it really doesn't. As a trader, you've got to get over this, CNBC kind of thinking of having to explain what the market does. You don't need to explain it. You just need to see it, like almost like a detective. You don't need to explain what the criminal must have thought. You just need to collect the facts, and the facts are that we were completely sideways on the open. We put in a pretty good balance profile, very, very quiet, but it started to give signs early on that it's likely to start moving up. But I did not expect it to push up, 30 points, 30 some odd points, as it did. So it's I all you can do is see that there's definitely a lot of buying going on, and there was a lot of room yesterday, by the way, for it to continue higher. A quick look at the cash indices. This is a chart that tracks all of the all of the underlying sectors as well as the futures that I watched who um, as and it helps me see what is underlying this. And as you can see here, these ones, these dotted lines. Let me change my pointer color here to something a little more obvious. These dashed ones, the ones that seem dashed like that, this one here. Um, these are the underlying sectors. So I monitor five underlying sectors, and those five underlying sectors make up about 75% of the S&P 500. Those sectors are financials, which is the one of the strongest now, industrials, technology, the consumer discretionary, and healthcare. Those five, and you could see healthcare was the major drag yesterday. Um, there was a lot of there's again more political news about drug prices and the cost of healthcare. So the expectation is that's going to hit those profit margins. But healthcare picked up later in the session, and here's where that burst happened, right in here. And you can see that this burst. So if you remember that the line is right there, you can see that this burst went it was broad in nature, and I look for that. I look for a push that it's very broad in nature to tell me that it's not just something that's happening within a sector or one stock or one commodity. It's across the board. Systems are engaging with the market. You don't want to stand in the way when that happens. And so this is important to see. You could see it right here in the even in the healthcare sector, and you could see it across the board in all products, really, the euro, the whatever. So, in other words, this whole thing was very, very meaningful. You could see the transports were up 2.5% from where they opened yesterday. That's pretty big for that index. That's a pretty big up day, an unusual up day. So overall, we saw an upward skew. And the other thing that is odd about what happened yesterday is that we saw this movement take place also in the treasuries. The treasuries, here's where they sit. The U.S. The U.S. symbol here is the U.S. bond, JPY, which is the Japanese U.S. And the 10-year and the Bund are all above the 0% line. So as the market was rallying in all stock sectors, in stock indices, and across the board, so were treasuries, which is another thing that's very, very unusual. So I get the feeling that I get the sense that this coming year is going to be a very interesting year for trading, to say the least. Let's shift gears here and look at what we're expecting for today, given the way we're set up overnight and how we are positioned. The expectation is for the market to open, continue to push higher, and then end up somewhere near the high of this profile. I expect the range to be fairly wide or wider than normal today. I expect continued participation on the daily or higher time frame programs. So I do expect it to continue higher today. But I'm expecting it also to be a 14 to 15 point range day, and for it to hold steady and take a break. The market sprinted at full speed yesterday, so I expect it to take a breather today for a little bit. But the way it closed tells me that the auction is incomplete. The auction got interrupted by the fact that the market closed. The secondary hypothesis here is that we balance our overnight inventory, hold steady, and then come in and push later on once we've advertise prices lower towards 22.27, the 22.27 area. Once we advertise prices lower and can entice buyers to step in, then we take the turn and start moving up. So I'm looking for, if I'm gonna look for a short here on the open, I'm looking for 22.27 as the key area to offload any shorts before the market starts rotating up. Shorts are much more risky now, even though, unless you believe in the gambler's fallacy, uh, even though the market seems extended and there are many, many shorts out there, people who faded this move going the other way. I mean, I watched a lot of them yesterday. Um, there's still a lot of room for this to continue higher, in my opinion. So that's those are the two scenarios that I've got to play with. I want to remind you that there is a webinar on Tuesday. Thanks for listening in, and I guess I got cut off there. I was just talking about uh, the webinar for Tuesday, 4:30. Um, it's I suggest you register even if you cannot attend. It is a webinar about order flow and how the market, how larger participants manipulate the book to execute their trades, smart algos and things like that. We'll look at that and just even if you're not going to attend, just sign up so you can get the recording once it's published. Sorry about the cutoff there. My mic got turned off. Anyway, I'll leave you with that. Good luck, and I'll catch you tomorrow. The flex levels will be updated right after the open. I have to do a lot of work to get them up and running. I lost my data this morning. The ES flex levels will be posted shortly. Take care.